Good morning, welcome to IG's early morning call. It's the final trading day of the week, Friday the 2nd of June. Let's take a look at the headlines as we await today's non-farm payroll data out at 1:30, likely to be one of the swing points of today's session overall. It's certainly something the currency markets will be waiting for. At the moment, we've got the US dollar easing back into some of those gains that we've seen recently. We've got some moves in the markets. We'll cover those in the next 15 minutes. Hang Seng Stock Index, meanwhile, one of the best upside performances, up as much as 4% in today's session on the cash trading day. It's been led by property and consumer stocks, also a tint of tech in there as well, leading the gains. Oil prices, meanwhile, continue to be under scrutiny. Russia continues to pump cheap oil out into the market, and that continues to upset OPEC+. We've got a meeting over the weekend, and it'll be interesting to see what comes out of that. Also, Baker Hughes later on today. Yesterday, more oil coming onto the market, according to inventory data from the EIA. So let's take a look at what's happening. Well, we've got volatility, first of all, down very close now to levels not seen since July 2021. So we're not too far away from near 2-year lows of volatility. What does this mean? Well, it means that us traders are looking at areas of more risk, and investors are going into risk assets, as we'll see in just a minute with equity markets up, and moving away from the dollar. When the volatility index goes down like this, it means that markets don't move as much in the sort of direction that traders like. So it is less of an opportunity for traders, but more of an opportunity, I think, for those that consider themselves to be longer term investors. So with this in mind, let's take a look at what's happening in the FTSE 100. I should say all this is as a result of the Senate yesterday passing that budget bill in the States. It's now gone for the presidential seal, which is the final rubber stamping for the act to be passed. This is the FTSE 100. You can see yesterday a positive day. These are one-day candles. Second day in a row of gains. We're just bumping up against the 200-day moving average, which is likely to be a little bit of a hurdle for that index as we look into today's session. But we're looking at the moment for a positive start, not just in the London markets, in Germany, second day in a row of gains. Highest trade there we've seen since almost the beginning of the week, and in the French markets as well. Second day in a row of gains. Not quite as high as we were, and in fact looking as though, unless we get a really big move up on the upside today, and I have to say we are at the top end of the candle at the moment, indicating there's no sellers. Unless we do get an absolutely rampant upside today across these European markets, we'll go down as another week of declines for the equity markets. French CAC 40, as I say, second day in a row of gains at the moment. So let's take a look at what's been happening overnight in the Asia-Pacific markets. In amongst those that I think it's worth noting, that rise there on the Hang Seng Stock Index. We still haven't finished the trading day today, so we're up 3.9%. As I said in the headlines, we've got those consumer stocks, property stocks, and some tech stocks as well, eating into some of the losses that we've seen. Look at the markets here. Now, these are 24-hour candles. When you look at this, it's up 2.6%. The reason why it's up 2.6% is because the trading day in Hong Kong straddles what we here have as 24-hour markets. So you have to steal back a little bit of this candle we saw yesterday in today's trade if you're looking at the cash session. Anyway, very close to the top of the trading day, the candle, I should say, on today's trading day at 19,010.11 as we count. And that means that there are no sellers in this market at the moment. So money going in to many of those overnight markets in the Asia-Pacific region, as you saw gains in other markets as well. Let's take a look at what happened yesterday on Wall Street. As at the close, we saw gains across the board with money mostly going into tech stocks. Tech stocks have been the big beneficiaries of all the money that's gone into these markets. But yesterday, as we saw the Senate pass that bill late in the session yesterday, we saw gains come through. And look at what happened on the 24-hour markets. We're not too far away from the top of the candle on the Nasdaq, as at the close yesterday at 14,479, which is where we are at the moment, which is where we're consolidating as pretty much at yesterday's high point. The Dow Industrials has been the poorer performer, relatively speaking, but it was a good day on the upside yesterday. We saw a brief print below the 200-day moving average yesterday, and then came that spring up to levels, and indeed we're at 33,145 now, showing a slightly better and stronger candle today on the 24-hour markets as you await today's start of the trading day. And of course, the trading day comes after that non-farm payrolls figure out at 1:30. So could yesterday's strong private payrolls number from the ADP ADP reading give us an insight into the potential upside risk to today's non-farm payrolls. That report from ADP yesterday showing 278,000 jobs opened in May, forecast to be for 170,000. Now, the NFP expectations, 190,000 job creations are forecast for the month of May. Proportionately, using that ADP surprise, that would mean an upside reading for NFPs close to 300,000. Now, the unemployment rate seen rising one notch to 3.5%. Why is that rising when you've got that rise in the number of job creations? The unemployment rate is not taking the same data that the jobs numbers themselves are being produced from. Average hourly earnings, we're looking there for that to go up 0.3% month on month, 4.4% year on year, still below the rate of inflation. Now, this chart shows the unemployment rate back to pre-COVID-19 levels. It's clear that jobs have been created at an appreciable rate, and this alongside a relatively strong GDP number and inflation coming down. There may yet be a soft landing for the US economy, but if the Fed does continue to raise rates, things may get a little bit more sticky for the economy and a little bit more difficult to predict. This is a comparison of Fed funds rates and US consumer price inflation since January 2021. So you can see here the rate at which the US central bank has been piling on the pressure on the monetary markets with that rise to 5.25%. And at the same time, the CPI number is coming down, which is a good thing, but it's still not down to the 2% level. 4.9% is a long way away still from the 2% target. So the Fed is entitled still to have an excuse to raise interest rates. Let's take a look at what's been happening with the US dollar basket. Yesterday, we saw a pullback, this coming through as we saw money going into risk assets because of that rubber stamping from the Senate, or the vote in the Senate to approve the budget. That's now gone for the presidential seal, and we've seen a second day in a row of losses for the for the dollar basket. As far as the euro dollar is concerned, bouncing away from that 76.4% retracement. And I think now you will have been stopped out. If you were short on this, you will have been stopped out on this, and hopefully you'll have got some profits on the way down. So that's where things are ahead of non-farm payrolls out today at 1:30 p.m. UK time. And we will be live on the IG platform at 1:25 today. Now, let's move on to take a look at other areas of the market. I want to kick up a couple of stocks worth watching at the start of the day's trade here in the London markets. The first is Dechra Pharmaceuticals. This is the veterinary pharmaceuticals company. It's announced this morning that it's now recommending the offer that the Swedish company EQT first made back on the 14th of April. I think it's easier if I show you the chart to show exactly what's been happening here. This red dotted line on the chart is where that excuse me, that bid came through from. And that was the 14th of April this year. And you saw it, the stock just fractionally tip over that £38.75 level, which is what that offer represents. So at 33.75, there is the potential for further upside to go in today's session. This values the veterinary group at just shy of £4.9 billion. But you can see it's well off the highs, the COVID highs that we had when this stock went all the way up to that intraday high at £55.27. Now, that was because in lockdown, everybody was pampering their pets, whatever their pets were. And the, no innuendo there, please. And the point of the conversation here is the fact that subsequent to that high back on the 24th of August, we've seen this pullback of a 55% loss in the value because people began to realize this was overpriced, and the fact that people didn't do quite so much, I don't think necessarily for pets, as we started moving out again into the wide world. Since then, we've seen this offer come through at 38.75, which the company now says is applicable, and they should go back to shareholders. They've done that. They've now proved it. So that's likely to be the point at which we see shares settle out. Staying on the charts, just wanted to update you as well on what's happening with Wizz Air. The direction of travel here has been higher highs and higher lows. Today, we've seen a representation of data out in May. Wizz Air carried 5 million passengers, representing a 22.1% increase compared to May last year. The load factor is 90.2%. That's still quite low for some other of these discount airlines. I think Ryanair is about 92, 93%, to give you a benchmark on that. But nonetheless, this obviously is a big increase on last year. But one would expect that as we all go back into the air to enjoy overseas holidays again. And certainly the projections are that this will continue throughout the summer. Let's take a look at a couple of stocks we saw move in the post-market session last night. Neither is an all-session stock, so there's no representation on IG charts here. But Broadcom released better than expected earnings out last night. The reason why we're interested in this is because it's got a bit of its business in AI. It's a chip company. You remember the NVIDIA story a couple of weeks ago, and they didn't disappoint, really. It wasn't as strong as NVIDIA, but earnings per share coming in at 10.32, 20 cents higher than expectations. Revenue also marginally higher than expected, up 8% to $8.75 billion. However, shares fell in extended trade. Now, as I say, you don't get this represented here on the Broadcom share price I'm just about to show you, but Broadcom came out with a disappointing forecast, even though it sees third quarter revenue of about $8.8 billion, higher than the $8.7 billion expected by analysts. But expectations weren't as robust as some had been hoping, because we saw that number out from NVIDIA just last week, where we saw the company beat by a substantial margin its projections. And that stock was up tremendously, in fact, going to a record high. But we didn't see that yesterday. But like NVIDIA, artificial intelligence is rapidly becoming an important part of Broadcom's business. It now represents around 15% of Broadcom's business. So it is a large part. So I think in future quarters, we should be expecting more comment about this area of the market. And clearly, this is something that's going to drive future growth over the next quarters as we see a continuation of a rebound in some of these economies. Broadcom's chief executive believes the AI business will account for more than 25% of the company's semiconductor revenue in 2024. Now, another company out with earnings out last night, same sort of message actually, Dell, the computer maker. Good earnings, not a particularly good forecast. Choppy trading day yesterday for Dell Technologies. Shares fell 2% after the bell, reversing gains of 5%. The stock was briefly suspended during yesterday's session because the numbers were out early during the trading day yesterday. Results that broadly smashed Wall Street's estimates for its fiscal second quarter. It published an adjusted $1.31 a share on sales of $20.9 billion in the quarter. Analysts polled had expected Dell earnings of 86 cents a share on sales of $20.3 billion. However, this meant that year over year, Dell's earnings fell by 29% on a 20% drop in sales. Dell's Infrastructure Solutions Group, this is the commercial unit that sells servers, storage, and networking gear, reported an 18% drop in sales to $7.6 billion. The company's Client Solutions Group, this is a fancy name for the division which sells desktops and notebook PCs, and it's predominantly reliant on the private consumer sector. It posted a 23% drop in its sales to $12 billion. Now, with demand slumping, PC makers now face a pile-up in inventory amid an uncertain economic outlook. And this is represented in the post-market trade yesterday. This chart doesn't represent any move lower, but we should see or expect to see something like around about a 2 to 3% drop in shares at the start of today's trade. It closed out at 45.47 yesterday. Now, let's move on to the commodity markets. Just want to show you a couple of charts. This is Brent. Second in a row of gains for the price of Brent. There's more evidence that crude oil continues to build. US crude stockpiles rose unexpectedly last week by 4.5 million barrels, according to EIA. Analysts in a Reuters poll foresaw a 1.4 million barrel drop. So that again, which is strange actually when you see this rebound in the price of oil. But it did come yesterday, and we saw this move up after 2 days ago, we saw a new recent low for the price of oil. And as I said, we've got more Russian oil coming through into the market. And so long as Russian oil comes through, there's going to be this disagreement between Russia and the other OPEC plus nations that wanted to start to restrict oil coming through into the market. But Russia continues to pump. I will be undertaking an interview a little bit later on today with an analyst about this Russian oil coming onto the market. That will be a podcast published early next week. So it'll be interesting to see what the outlook there is for the price of oil. Last Friday, just a quick wind back in the calendar to demonstrate what happened to Baker Hughes rig count, falling by 9 to 711. The number of oil rigs in operation fell to 570 from 575. And this drop in the number of rigs in operation could well continue so long as we see a lower price for oil. Now, as I said, OPEC Plus meeting over the weekend. So far as sources have been telling Reuters that the alliance is unlikely to deepen its supply cuts or increase them. In a surprise announcement last April, OPEC Plus, you'll remember, brought total output cuts to 3.66 million barrels a day, or about 4% of global consumption. This drove Brent about $9 higher to above 87 over the following days, but Brent since lost those gains to trade below 73 at one point a couple of days ago, currently at 75.10, awaiting that announcement over the weekend from OPEC Plus. Let me stay on the chart and just quickly dial in a couple of other areas of interest. Some relatively hefty gains this week for the price of copper. We've seen some relatively good economic data coming through once again from China, which has helped the situation on the manufacturing PMI data. Copper up again today at 82.80. And finally, just wanted to run around a quick check on what's happening with the price of gold. This is the first week in 4 where we've seen gains for the price of gold, currently trading at 1978. That's it from me. Just a quick reminder that at the top of the hour, we still are expecting a rise in the indices across the European markets. Look out for Dechra Pharmaceuticals as we see that gap close between the £33 area where it closed, yet £38 of that bid. Dechra Pharmaceuticals also potentially upside possibilities as well for Wizz Air after that positive news that it flew in overnight coming through on its numbers of people travelling in the month of May. That's it. We're back at 10:30 with Chart in the Markets. I'll be back as well at 1:25 with a live on the IG platform talking about what's going on with non-farm payrolls. For more videos from us here at IGTV, join us on Twitter at IGCom, Instagram, and subscribe to our YouTube channel.